So hello guys and welcome back to Equi Edge Research, where we share cutting edge insights for you across different sectors, overall economy, and we try to decode some stock market psychology. So guys, today we are starting with this new series of daily updates and analysis of the equity markets, where we are going to talk about macroeconomic factors as well as news related to the stocks. So let us start. When we talk about over the last few trading sessions, the market sentiments has clearly turned cautious. And according to the market experts, these weakness has not been driven by just one factor, but by combination of various factors like rising crude oil prices, rupee depreciation, and sustained selling by the foreign institutional investors. Now, at the first glance, this may look like a normal market correction, but we go one layer deeper, the situation becomes much more interconnected. The sharp correction in the markets was primarily triggered by a spike in the crude oil prices. And this spike came after the renewed geopolitical tensions surrounding the US Iran situation, especially after US President Donald Trump showed dissatisfaction towards Iran's peace proposal. Now, why is crude price so important for India? Because India is one of the largest importing countries for crude oil. So whenever the crude prices rise sharply, India's import bill increases. That starts creating pressure across the economic system. Higher crude prices can increase inflation, transportation cost rise, manufacturing import cost rise, and energy-linked businesses face margin pressures. Eventually, consumer purchasing power also gets affected. Secondly, the rising crude prices usually put pressures on the Indian rupee. Now, India has to spend more dollars to import the same quantity of oil. This increases dollar demand and weakens the rupee further. Now, this is where the third factor becomes important, that is, foreign investors selling generally become more risk averse during the periods of geopolitical uncertainty, currency weakness, and rising commodity prices. When foreign institutions continuously sell Indian equities, there is a crunch of liquidity in the market. So we are currently witnessing is not just a temporary emotional reaction, but the market is trying to reassess the multiple macroeconomic variables, whether crude oil trajectory, currency stability, foreign institution capital flows, and geopolitical risk premiums. Interestingly, corrections like these also reveal the internal strength of sectors. Sectors heavily depend on imported raw materials may face temporary margin compression. Over the other hand, certain export oriented businesses could partially benefit from rupee weakness. So the market now enters a stage where selection of stock becomes far more important than a broad based optimism. Because in the volatile macro environments, the difference between strong businesses and businesses starts becoming visible. You see, when we talk about businesses which are heavily dependent on the imports, are going to see the margin compression. That is because most of the times when the margin or the raw material or the price of raw material increases or the cost of production increases, these cost is eventually passed up to the customers. But over a longer haul, if this situations does not get corrected, now the management has two options, whether pass this extended margin or continue the business with the same margin, extend the cost to the customer, or the company can take the margin hit on themselves, and this is going to affect the sectors heavily, and thereby the valuations of these companies and the sectors are eventually going to lose up. Whereas some of the sectors which are export led, because the rupee has really depreciated, the people outside are going to buy much more because now the purchasing power of them is quite more improved when they have dollars in their hand, because the value of rupee is decreasing because now India is trying to buy more and more dollars. So the demand of the dollar eventually increases, which leads to the rupee depreciation. So these are some things which we have to keep in mind, which we have to take into consideration, and based on those considerations, you see there is a strong value migration that has been happening, and the sentiments are been shifting from macroeconomic optimism or macroeconomic investments to the stock oriented or pure sector or stock oriented investments. So this was all for today. Till then, stay tuned.